Today we finally had a great day for Nvidia stock and the overall semiconductor market. We can see Nvidia was up roughly 6% today. So in today's episode, I want to do the following. First, take a closer look at why semiconductors rally. Second, I want to take a closer look at an interesting but boring way to play the semiconductor space that I enjoy very, very much. And third, I want to end this episode kind of looking at Intel and AMD and showcasing some opportunities for both these plays. And it's pretty interesting, right? Because Intel, I think year to date is down over 50%. So how can one play this disastrous of a company right now? Well, we'll take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so first let's start off with Nvidia, and we can see Nvidia was up roughly 6% today. In the past 5 days, crazy volatility around the market, but overall the stock is up 1%. All right, so before we go any further, I want to start off with a question asked in the last video, and if you want a question featured in the next video, feel free to post it on the comments below. But Corey Money wants to know, what are most of the viewers' average cost basis for Nvidia? For Corey, it is roughly $120.90. So now I want to take a closer look at why the overall stock market was green, especially kind of the semiconductor space. I mean, we see Nvidia was up 6% today. We see AMD, another monster, up 6% today. We see even companies like Broadcom, which I believe is one sitting at some great levels right now at 7% for the day. We even see some of your favorite semiconductor companies, Intel, up over 8% on the day, right? And the main reason is obviously we've seen this crazy volatility in the market in the past few days. So usually following a red day, you kind of see a nice green day. But the other thing is, it does seem like, based on reports, today's jump was sparked by an employment report that showed a decline in initial unemployment claims, cooling off fears that the economy was possibly headed towards a recession after the July unemployment rate jump from 4.1% to 4.3%. So you guys know me, I'm an engineer, I'm not a financial analyst. So I usually don't cover macroeconomics or anything that's impacting the stock price in those regards. I really focus more on the tech based on my education and career background, but I definitely wanted to bring that up to showcase why one of the reasons we're seeing such a bullish trend in the overall market right now.
Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode.
Now, I did mention at the beginning of this episode that I would discuss what's a very boring but important way to kind of play the semiconductor space. The semiconductor market is full of cyclicality, is full of risk investing in individual companies. I am a much believer that the semiconductor space is gonna lead the technological revolution for the next 10 years at least, maybe even more than that. And if one doesn't want to invest in a semiconductor individual company, I believe the next best approach is actually investing in a semiconductor ETF, where you get a full basket of multiple companies and you still get a nice amount of returns. Historically, SMH has outperformed, and the semiconductor has outperformed the S&P 500 and the Qs. Obviously, you do get kind of those downturns as well. But to me, if I was to invest in ETF or the overall market, I think I would post most of my money on SMH. And I believe outside of my individual stocks, SMH is my biggest ETF in my portfolio. We can see year to date, the stock is up over 33%, where the NASDAQ year to date is up 19%. And where, let's take a closer look at the S&P 500 or SPY, year to date is up 12%. So SMH has completely demolished the overall tech market and the overall market in general. And I believe in the long term of things, that's always going to be the case, at least for the next few years, because of the evolution that we're seeing in technology, from AI, from autonomous driving, from robotics, from space travel, to the list goes on and on and on. So definitely, if one is looking for maybe a I would say, safer way of investing in the semiconductor market, definitely check out Semiconductor ETF SMH. And there's a few others that I personally invest in, but pretty much is the same kind of topic of investing in a general semiconductor ETF in space. And next, I want to take a closer look at Intel, but I do want to say thank you all for the support on the ebook. I do have 2 ebooks, an encyclopedia and an earnings insight. I just sent out the updates, so if you did purchase the books, remember you get free updates. I just sent the updates. If you haven't gotten the update on the earnings one yet, check your spam folder. We are on version 3. So if you are curious about learning more about the semiconductor space, check out moresemiinvesting.com. If you buy both ebooks at the same time, you get an automatic $20 off. There's no code, and both of these are living documents. As more earnings come out this quarter, I'm going to be adding more of them to the book. So check it out at moresemiinvesting.com. So now let's look at Intel, and Intel up 8% for the day, but we can see the stock is sitting at $20.49. Year to date, the stock is down 57%. And this is wild, right? This is a time and era where we're seeing growth in the AI PC space, in AI solutions, and something that Intel, with their server CPUs, with their consumer CPUs, can definitely benefit. And Intel also has some form of AI accelerator, even though it's at such a small market. So just a quick recap of what's happening with Intel and some of the recent bearish news. The first thing is, unfortunately, Intel did announce that they were cutting roughly 15,000 roles off their workforce. The main reason is their revenue have not grown as expected, and they yet to fully benefit from the powerful trends like AI, and their costs are too high and their margins are too low. So obviously right off the bat, we can see what's the negative impact for Intel stock and what is the biggest bearish case. So right now, this is what's creating a lot of fear. Some other fears are, recently we did have Intel shareholders sue chipmaker after job dividend cuts that caused stock to plunge. So we're going to continue to see a lot of this negativity. And when we look at kind of Intel's core product, like I mentioned, they hit the client consumer with CPUs for laptops, for desktop. That revenue is down on a sequential basis, and it's barely up on a year-over-year basis, where, for example, for AMD, their biggest competitor, we can see the client market was up over 49% year over year and up 9% quarter over quarter. So we can see AMD is definitely doing a lot better than Intel in their client group. And if we look at their data center group is down on a year over year basis, where AMD's is up over 115% on a year-over-year basis and up over 21% on a quarter-over-quarter basis. So the biggest fears here are, just like I mentioned, Intel is not growing fast enough, and the main reason is you have heavy competitions from the likes of AMD. Now, kind of more bearish sentiment recently, Intel's 13th and 14th consumer cheap CPUs seem to have some instability issues, which is causing kind of more negative press for the overall business in general and for their brand. And AMD is taking advantage of that as they recently released some new CPUs, the Ryzen 9000 series, and the reviews all over the internet and YouTube have been amazing for this platform. So we definitely see this bearish case for Intel and how AMD is eating Intel's lunch in both the CPU market for the consumer and the client space. Now you might be wondering, hey Jose, you mentioned earlier on that there might be an interesting way to play Intel. And I definitely think that is the case, and the main reason is because of their foundry business. So Intel is focusing on manufacturing business, but unfortunately the manufacturing takes a lot of years to really showcase any results. Luckily, the only thing we can see, or unfortunately, the only thing we can see is kind of small evidence here and there of how they're progressing. And Intel recently announced on August 6th that they are focusing on their Intel 18A products, and their Intel 18A products, which is their Panther Lake, which is a CPU for the client processor, and Clearwater, which is a processor for the server market, are out of the fab and have powered on and booted operating systems. And they expect both products are on track to start production in 2025. They also expect the first external customers is expected to tape out on Intel A in the first half of next year. So right now, Intel 18A, for those that are not familiar, is the type of chip manufacturing node that they believe is going to be lead in edge process node and is going to be able to take leadership from TSMC. Well, I don't believe that's necessarily true. If these reports are true and if they do have some really viable solutions, this could be a big win for the company. Now, unfortunately, we really won't hear results about this until maybe the second half of 2025 on how things are going, or maybe at early the first half of 2025. So that's going to take some time. So for me, I think Intel in the short term is going to be pretty much dead money. Obviously, we'll see stock prices move up due to various sentiments changes, but in the long term, I don't believe we should expect much for Intel. Now, for Intel, there's only two things that can really happen for me. If they do good, it's going to be massive, massive for the company. It means that if the company does really good in their manufacturing push, a market cap of $87 billion is going to be very low compared to where they can grow. I believe if things go well, this can 2-3x very, very easily. If they don't do really good, then this can kind of drop extremely fast. So if one is looking into playing the Intel market, I want to say the best approach, and this is probably only if you're familiar with options, is buying options that are are over a year away and at a very, very far strike price. Like I mentioned, for Intel, it's either they're going to do really good or really bad. Because like I mentioned, if things go well, then Intel is going to jump dramatically. So that's probably one way to kind of play Intel stock. Again, that's not advice. And if you don't know how to do options, then probably ignore it. But just a random idea. Let me know what you guys think about that idea in general. Now for AMD, in my opinion, is going to be a beast. They're going to win market share in the CPU for processor, for server processor, and for client processor. They're also, in my opinion, going to do well with AI solutions with their MI300 and MI325, MI350, and MI400. So AMD is one that I believe at these levels of 136 is still pretty cheap. This is one of the few semiconductor stocks that I'm really, really looking to add more into my portfolio. So let me know, what are your thoughts on these recent updates? What are your thoughts on AMD versus Intel? Take care, have a good day, and see you next time.